Today's number is 45%. That's how much some owners have lost since purchasing new in the Guardian Tower. The Calgary condo market keeps moving up, but not all apartments are up from the last peak or even since purchasing new. The Guardian Tower is one building that a lot of my clients ask me about, and it has it all. It has the right views, great location, large units, but there are a few issues. The number one issue that you see all over the internet is the lack of elevators. From personal experience, if you go there in the morning or even during rush hour in the evening, there's often a lineup of 15 to 20 people just in the lobby waiting to get on the elevator. The elevators are typically out, and there's countless stories of residents needing to walk down 20 plus stories to leave or get back into their unit. Reason number two, they do allow short-term rentals like Airbnb. This might not always be the case, but it is for now, and it can sometimes be tough for long-term residents when you have a constant traffic of short-term renters in and out of the units and in the building. Number three, the break-ins. So this is something that comes with living downtown, unfortunately. You're always gonna have more crime, more car prowlings, thefts, building break-ins if you live downtown. I do think that the management company and security has done a pretty good job of securing the building, but I also get the frustration from the owners. In a seller's market, in a hot market, apartments sell, but it doesn't mean that the sellers are making money on the unit. There was a suite in the Guardian that recently sold for 50% of what they paid for it back in 2007. And there are plenty of other examples of units in this building selling for some steep discounts. And keep in mind, there are still new suites available in the building 7 to 8 years after construction was completed. I don't want to pick on the Guardian Towers because realistically, there's a lot of buildings that are hurting. Majority of them are suffering from poor construction or poor financials. I always tell my clients, if the deal seems too good to be true, it usually is. If it's cheaper than the next building, then a similar building, it's too good to be true 99% of the time. Now let's dive into Calgary apartment stats, and then we'll go over some red flags that you should watch for before buying a condo in Calgary. In June, Calgary saw about 800 apartment sales, which is almost 8% less than what we saw June of the last year, but total sales are still up 13.5% versus last year. This increase is a clear indicator that the condo market in Calgary is still moving upward. So what does that mean for potential buyers and sellers? For buyers, it means more competition. So it's crucial to act fast when you find a condo that you like, but not so fast that you aren't doing any due diligence and are getting burnt. For sellers, it's a great time to list your property because demand is high. Now let's look at the new listings and inventory. In June, there were about 1,100 new condo listings, up 4% from the previous year, and active listings were almost up 10% from the previous year. Sales and average prices are way up from last year, but we're seeing it leveling off, which is healthy for any market. We are seeing one bedroom and mispriced apartments start to stack days on market, and this chart shows expired apartments and months of inventory increasing. We are still way below long-term trends, so inventory would essentially need to double and months of inventory triple for us to even get close to a buyer's market. So why are we seeing this kind of demand? Affordability is the major factor. The average price of a condo in Calgary is now just over $350,000, up nearly 20% from last year. Even with these high increases, condos are still a lot more affordable than single-family homes, semi-detached, or townhomes, making them very attractive for a lot of buyers. This affordability is particularly appealing for first-time home buyers and investors looking for a rental property, and out-of-town buyers from provinces like BC and Ontario, where their average condo is double in price. Just to break that down even further, I think it's important to break it down by area and neighborhood. So communities like Beltline, East Village, and Mission, they're particularly popular, but they're not going to attract the same demographic of buyer as our suburban apartments like Auburn Bay, Cranston, and Tuscany. East Village is rapidly developing with new residential and commercial projects, making a hotspot for young professionals and investors. Auburn Bay is going to attract more young families that want a safer community and be closer to schools and obviously have lake access. When you're looking at buying an apartment, whether it's for a primary home or investment, it's important to think about who the next buyer will be and what other competition you may have in the future. When there were 3 major builds happening downtown, which were going to add thousands of units in a concentrated area, it probably wasn't a great time to buy a pre-built or brand new. When there are 36 complexes slated to be completed in one community over the next 10 months in a new area in the suburbs, know that all of those new builds could be your competition when you go to sell in the next few years or as rental competition. All right, quick pause on this video. Listen, before I say anything, this isn't coming from me, this is coming from the entire team. We need more subs. A lot of our viewers are still not subscribed, so please like, share, and comment below on the type of content that you'd like to see next. On the macroeconomic front, the Bank of Canada has been signaling more interest rate cuts. This could further fuel the condo market as lower mortgage rates increase purchasing power for buyers. It's a trend worth watching closely because it could lead to an even higher demand and rising prices. Lower interest rates also make refinancing more attractive, which could help current homeowners save money and potentially invest in additional properties. Looking ahead, the future of Calgary condos looks very promising. We have ongoing urban development projects, improving economic conditions, and potential further interest rate cuts. We expect continued growth in this sector, but I do think it's very important to stay informed and be adaptable to changes. For example, projects like the Green Line LRT and the new Flames Arena could help the surrounding buildings see a decent boost. As promised, these are the red flags that you need to watch for when you're looking to purchase a condo in Calgary. Number one, poor track record. So it's true, a new management company and a few repairs can turn some buildings around, but rarely. I like to ask when and if the last special assessment happened. Majority of the special assessments have come from poor workmanship and building issues, which have led to early replacements that weren't budgeted in. Special assessments can throw reserve funds off by a decade and increase condo fees dramatically as well. Number two, certain builders. There are a handful of multifamily builders that I advise my clients to stay away from due to a very long track record of issues. Every builder will run into issues, but there's some that have had significant issues on multiple properties that have never been addressed. Not worth the headaches or taking a risk. Number three, and lastly, I just take a walk around the building and through the common area to see what the condition is. When I see stairs and concrete walkways crumbling, rails falling apart, hallway carpets torn, stains, and old leaks still visible, I know we're gonna have issues. Before I even look at the condo documents, speak to the seller's representative, or even sometimes my own seller, I know that there's typically been problems in the past. A lot of major issues can be prevented by preventative maintenance, and it comes down to the owners, the board, and management company to stay on top of it. That's it for the July condo market update, but check out my July Calgary real estate update to stay in the loop with what's happening in our city and through the first half of the year.